This conference will now be recorded.
Okay, so your 15 minutes is up. We started last time looking at cash, the cash cycle, and we talked about the importance of cash and monitoring cash transactions in a business. And strong internal controls are needed on receipt, counting and depositing and recording cash. We have this internal control process, control environment, control activities, information and communication, monitoring, and risk assessment. There are so many problems with controls, and so many companies were committing fraudulent activities that the Sarbanes-Oxley Act was passed in the early 2000s so that they could hold the chief financial officer, president, the board accountable when there was a problem. Then we moved to bank reconciliations, which is one of the major control items you have to reconcile your bank statement to make sure that there are no differences between what the bank has and what you have on your books. And we said that in doing a bank reconciliation, that there were two analyses. There was a company analysis where we look at the balance per checkbook. We add unrecorded deposits from the bank. We deduct unrecorded charges. These are items that we don't have, and we come up with a correct balance. Then there's a bank analysis where we went to the balance per the bank statement. We added deposits in transit. We subtracted outstanding checks and withdrawals to come up with the correct balance. And so I will go with correct balance. We look at items coming in the bank statement that we don't have. We look at the bank statement and put in items that the bank don't have, and we come up with the correct balance. And we worked this little problem last time, A and B. And so your job today is to work C. So you've got to do C. So given the information we have, make your screenshots of that information for column C. Then I want you to do the bank reconciliations for company analysis and bank analysis for C. So does everyone have their screenshot done?
Professor Boyd,
Yes.
I'm gonna speak for the class, maybe give or take. This is a lot. Like, I'm about to pull my hair out. I don't even know where to start. Like, I'm really confused on like what we're supposed to be doing, what we're supposed to be turning in. Like, I just feel like it's all piling up on
We'll
us.
clear all that up. We're doing a bank reconciliation. So what you need to concentrate on now, you don't concentrate on everything. What I got you concentrating on now is doing a simple bank reconciliation. So we'll do one thing at a time, and I'll be clarifying the other things. Right now, do this bank reconciliation. Take a screenshot of it and then attempt to work it.
So, but how we work it? Like last class, I couldn't even focus on what you were talking about because I'm focused on the attendance quiz, so I can make sure I get that grade in. So, like, I know I'm not speaking just for myself. I'm speaking for everybody in the class.
Well, I'm teaching the class, and I look at it and I will adjust it, but I just need you to work on this now, okay? Just do this bank reconciliation.
But I don't know how to do it. That's what I'm saying. Like, I don't even know where to start.
Some people may, so you're getting a chance to work on it, and then we're going to go over it, but you have to start on it yourself.
How am I going to start on something that I don't know where to start at?
It says company analysis, the balance per books. You go up here, what are the balance per book? 29.5. You put a 29.5 here. It asks you for interest income. You go up here and look for the interest income. It asks you for the service charge. You go look for it, and you just stay in the C column and do the C work. We're going to go over it. I just want you to start on it. Do the part you can do, and then we'll finish on it. Okay, so when we do the company analysis, we start off with what do we have on the books. Then we add the interest income from the bank, which we don't have. So in this case, the interest income, which we don't have on the books, is $2,000. We also don't have the bank service charge in our records. That's $500. And so in getting this reconciliation, since we don't have the 2,000 interest, and since we don't have the 500 service charge, we put those on the reconciliation. And if we add the 2,000 interest, if we subtract the 500 service charge, then the correct balance should be what? What is our correct balance?
1,500.
You started off with a balance in your bank account of $29,000.
It's 2,700.
You started off with the
Well,
balance.
yeah. Wait,
You got
never mind. No, it's not.
We have 29,500. There are two items you don't have on your books yet. 2,000 interest the bank gave you. So you got 20,
So it's
and then there's a $500 service charge the bank gave you.
3,100.
Yeah,
yeah, about to
31.
say that's what it is. I was trying to wait till you finish talking to Hey man.
So how much?
It's 31,000.
No, 31,000.
It should be 31,000. You had 29,500 in your records.
Can I ask you a question?
Yeah, let me go. I'll come back to it. Come back. The bank said that we could, you get your bank statement. They got 2,000 in interest. You don't have that, so you add it. Then there's a 500 service charge on the bank statement. You don't have that, so that tells you that your balance is 31,000. What's your question?
Okay. I seen you upload. Hold on. I seen you upload the cash flow homework. Is this cash flow?
No, this is bank reconciliation.
Then wait. What is cash flow?
That's next. We reconciling a bank statement.
Oh,
And
okay. I just had to make
we
sure.
reconcile the bank
Cash
statement.
flow.
We'll talk about the cash flow homework next. But I think it is already uploaded. Someone check your assignments to see if that homework is uploaded, if you would.
You was flooding us in assignments.
I'm just see if it's there. Just someone just check on that.
No, no, I'm looking right now. Attendance for each other.
The cash flow is there.
It's
Okay, so that's the homework. And we'll talk
Okay.
about that later. So the first thing we're just doing is just a simple bank reconciliation, which if you are running a company or have a company, you have to make these corrections. If you got your books and the bank is putting these things on here, you make these adjustments. But you don't stop there. You want to make sure there are no errors. And so the next thing is to, okay, this is our books. Now let's look at the bank statement, which said that the balance per the bank was 30,000. So the bank says you have 30,000. Okay. The bank does not have a deposit in transit. They hadn't gotten it yet. So all of you, would have times where you've made a deposit. You get your bank statement. The bank doesn't have it. That's deposit in transit. So you need to add that in. Then there's outstanding checks that have been written, but the bank don't have. 3,000. And so if we look at the balance per the bank, 30,000, add deposits in transit, to track outstanding checks, we come back to the same correct balance. So the goal is to have the same correct balance when you do a company analysis and when you do a bank analysis. So it's pretty much this format. Company analysis, balance per books, forget it, it stays that way, plus interest, less service charge, correct balance. You simply pull that information from the information given. Then for the bank analysis, once again, the bank analysis information in here, you just put that information in. And so the goal here is to reconcile and make sure there are no differences between what your books are saying and what the bank does. You got your books that says what the cash is. The bank has your bank statement, which it says what how much cash you got. If you're just running, your small account, you can, say, well, I'll just see what the bank says and that's it. But if you got a company that you're running and there are numerous transactions and you got to control your cash.
Be our full final decision. Like either we find a car out there or we gonna get the car from your guy.
Really? Okay, you ain't too much worry about the backup yet?
I'm gonna have to pay to get it installed. I ain't worried about it. I would like to have it, but
Caroline,
That's
mute yourself, please.
yeah, like
What about the drivability part, like that part?
it was driving like I could get used to it.
Would have something about that you
I didn't really like.
Okay, I think we got rid of the car buying. Okay. The other part of this is that you don't have this interest income recorded and you don't have the service charge recorded. So on the interest income, you make an entry, debit in cash 2,000, and you credit interest income. You don't have this money recorded on your books yet. The second thing you do not have the service charge recorded yet. So you make an entry, debit the interest expense or miscellaneous expense and crediting cash. Those are just standard things you do. So this is a standard way this problem works. You erase your numbers and go back through it. But even so, this is a comprehensive one. We'll talk about that later. But for now, here is your bank reconciliation homework. So here we're just reconciling a bank statement. some reason the information, and so I'll put that in and get that to you. But these are some items to help you look at a bank reconciliation. This is a team assignment, 1 through 10. So the team works on it, and then the team submits it. One person on the team submits it. So the team works together, work on it. It's not the most major of things that we work with. I gave you the same numbers. So not looking back, you got the same numbers, so you can check it.
What
See if you,
chapter is this on in primer?
it's cash chapter,
You said cash chapter?
yes. So this bank reconciliation, where I'm and on the reconciliation, what I did was go back and use the practice problem numbers. It's a little different because I don't lay out the exact template. So all you got to do when you do this homework problem, company analysis, bank analysis, you putting in those items and then doing those reconciliations. So that gives you a better feel and sense for it since you're putting them in. You're simply trying to make sure that when you analyze your records and what the bank is saying, when you go to the bank's analysis and put on things that the bank don't have, you and the bank got the same amount of money. And all companies do this. They don't go and just say, well, the bank says this is what we got, this is it. And these are, basically simple and short. It's not a major thing that we're trying to do here. And other than what we're doing now, this homework, that's it. You won't be tested on bank reconciliation. So the homework is all you're going to be doing, 1 through 10. So I'd have put an assignment in there for that to come in on Tuesday. Okay, that's bank reconciliation, how to reconcile a bank statement. That's one of the big control items. We next go to cash flow statements. That's the fourth statement, the final statement that you're learning how to prepare, the cash flow statement. There are 3 parts to the statement: operating activities, investing activities, and financing activities. The key thing to learn here is the purpose of these 4 parts to the statement. Part 1 is operations. A company needs to be generating money from its operations. Macy's needs to generate money by selling clothes. So that's what we're putting in here, operation. What money did they make by selling clothes? Part 2 is investment. These are investments that Macy's making. Did Macy set up some more stores? We like this number actually be negative so that they're expanding. On the other hand, if this number is positive, then we know that Macy's is selling some of its stores. We don't want that income up here in operations, and we know eventually that there's going to be an impact on operations because they're selling some of their stores. Part 3 is financing. And in financing, this is how Macy is going to finance itself. Is going to finance itself by issuing common stock or long-term debt. At the end of the day, you want this to be positive. So let's look at it as an example. And so we have an eligible bachelorette who's in this class. And this bachelorette is so special that she says, I'm looking for a significant other, but the significant other has to have 100,000 in the bank. 100,000 in the bank. Person 1 has a salary job, has saved up $100,000. So he has 100,000 in the bank. Person 2 says, I really want to be eligible for this bachelorette. I'm going to sell everything I got, my car, my house, and everything, and I'll have $100,000 in the bank. Person number 3 is interested, so he takes out $100,000 of student loan. So he is going to have, he or she is going to have 100,000 in the bank. Given those situations, 1, 2, or 3, who are you going to select to be your significant other? Or it doesn't matter.
What was the choice again?
Person 1 has worked, has a job, has 100,000 in the bank.
Yeah.
Person 2 sells his house and car, and now has 100,000 in the bank. Person 3 takes out 100,000 in student loans. If you were going to select from those 3 situations, what person would you select?
1.
The first one.
Why?
Because they got common sense.
They got common sense.
Well, they already had money in their account. The second person sold his house and car. So what he gonna say? How he gonna get to my house? 3, he had to take out a whole loan.
So now he owe way more than $100,000.
Yeah.
That is the purpose of the statement of cash flow. For a company, operation is like salary. That's where the money has to be. Okay? So when you look at a company, and if they don't have any operations cash, that's just like that person, those other persons. With investments, we want to see the person or the company making additional investments, not selling what they have. Okay, so if they got a positive number here, they're getting rid of resources. So they're going to be just like the individual who sells his car and house, not going to be able to get to the job he has. And then 3, you don't want a company, to look at a company that has a lot of debt. They got cash, but they owe a lot of money. Well, that money has to be paid back. So, Ms. Smith, suppose your mother won $1 million at the lottery. She wins $1 million at the lottery. And she says you have your big time degree from JHJ School of Business at Texas Southern. Tell me how to invest my money. Where should I invest my money, my $1 million, for the best return? So what are you going to tell her?
The best way to invest my money. Honestly, everybody doing stocks now, so might as well invest in some stocks. Try to get some money out of that.
Invest in stocks. Okay. Now, the thing that you have to keep in mind is that once you buy the stock, that's it. Once you buy the stock, that's it. And so if the stock goes down in value, boom, the money is gone. And so if you just look at the income statement, you'd have problems. And so you got to look at, is there any cash to be around it? Why is that the case? Why is the statement important? In the early 2000s, companies like Enron would make a journal entry, debit and accounts receivable, and credit sales. And they might do it for $10 million. Okay. So this is what they do. So if we prepare an income statement, what's going to happen? The income statement is going to show 10 million in revenue. But the receivable is no good, so there's no cash. And so the purpose of the statement of cash flow is to show that, okay, you say you got income, where the cash to back it up? So if a company says it has income, doesn't have cash. So that's why we study the statement. So the key thing that we're learning from the statement is that a company, when it makes it, when we're looking at that company, you're trying to look at, okay, who should I give the money to? The company needs some operation. So you just can't look at the company. You got to look at their financial statements and see if there's some positive operations cash. Should be positive. Investments should be negative. The company's expanding. And financing, it should be positive. You're paying off debt. It's the example we use when we first started talking about this. You want enough money when you graduate, buy some more assets, not sell what you have, pay off your student loans, and still have money in the bank. And so this is a different statement. It approaches it from a different way. But if companies are fraudulent, or if they have excess inventories, if you don't look at the statement and you're investing money, you could have a problem. It could be a problem situation. And this is why there were so many frauds, a lot of them in Houston with Enron and Dynegy and everything, where they trick people. And so as a business person, and especially as an accounting and finance major, you got to understand the statement, or you won't be able to appropriately advise people how to invest money. So that $1 million, Ms. Smith, if you don't do this analysis on the company you're going to put it in, or the companies, then you're just gambling with the money. Okay. So that's the key thing you need to know. A company needs money in operations. This should be negative. This should be negative. And then you should have an increase in cash. That's what I want you to know. Now, there's always a calculation. And there's a way to come up with this. We looked at it last time. We talked about the statement and where things go. Then we scratched out some numbers. We did a statement of cash flow. And everybody at that point then understood how to do a statement of cash flow. Is that correct? So everybody in the class now can do a statement of cash flow. Is that correct?
No, can you go back over it? I don't think I was paying attention that day.
Okay. First of all, as we said, we can prepare a simple statement of cash flow, a simple statement of cash flow, utilizing the first 11 journal entries. The first 11 journal entries, that we learned. So that's going back to journal entry types. The journal entries that we debit that are sources of cash, 1 through 11, 1 through 7, 6, are going to be sources of cash. Journal entries 7 through 11 are going to be uses of cash. So that's the first thing. As we try and prepare the statement, we're just looking at the first 11 journal entries. It's going to be on the source side if it's 1 through 6. It's going to be on the use side if it's 7 through 11. Now, journal entries 2, 3, 4, and 5, if it's a short-term loan, are in operations. Journal entries 7, 8, 9, and 11, especially 7, if 7 and 8 are short-term, they're in operation as a use. But what is journal entry 2? That's sale of an asset. What's journal entry 3? Collection of an account receivable, getting cash that way. What's journal entry 4? Unearned income. What's journal entry 5? A short-term loan. All of these items relate to operations. All of these items relate to operation. And so we can look at these journal entries and determine how much income the company gets from operations. We can go over here to 7, 8, 9, and 11. 7 and 8 have to deal with current items, and we can determine how much money was used and come up with the net amount from operations with the goal to see if this number is positive. We want our sources to exceed our uses. So we look at journal entries 2 through 5. On the source side, 7 through 8, 9, 11 on the use side, to determine if we have cash flow from operations. That's all we're doing. If we have a sale of a long-term asset, we put it down here. If Macy's is selling stores, that's not operations. Macy's operations is selling clothes. So we separate it out so you are alert to the fact that they're contracting. On the other hand, if they purchase a long-term asset, stores or whatever, and this is negative, that's a good sign because they're expanding. That's what we put in investments that the company is making. Financing is how the company finances itself. Notice we have journal entry 1. What's journal entry 1? What is journal entry 1 since day 1 of the class?
Common stock, cash and common stock.
Okay, so they're financing the company by investing common stock. That's in part 3. That's not operation. That's how they're putting their money in the company, and they're asking you to put money in the company. Then we have journal entry 5, a long-term liability. Journal entry 8, when we pay on the long-term liability. And then what's journal entry 10?
Dividends.
Journal entry 10.
Payment
That's
of
nothing.
dividends.
Dividends.
Payment of dividend. And so what we show here then is if you put money in the company, did they pay your dividend back? But that's not operating stuff. That is, you need operations to make your decision about investing. Okay. So this just shows what the company was able to do for the people who invested with. So this is a template that we have. And I think this template, as well as a journal entry type, should be in course content. They should be right there together. Okay. So let's see, now we can get Miss Smith to work a statement of cash flow problem for us. You think you're ready to do that, Miss Smith?
I guess I'll figure it out.
Okay. We're going to do problem 4-1. Okay, so rather than assign 4-1, we're going to do 4-1 now and take our time. For homework now, I've changed it because I want to do a brand new problem so that hitting a new problem the first time, going straight through, you'll get a sense of how to do a statement of cash flow. And after this class, you're going to be concluding that this is the easiest thing in the world to do. Homework, teams 1 and 2 are going to do problem 4-3. Teams 3 and 4, you're going to do problem 4-4. So these problems are now in course content under assignments. So teams 1 and 2, you'll be doing 4-3. Teams 3 and 4, you'll be doing 4-4. Now we'll keep it that way. Okay. So what we want to do now is to work 4-1. We want to work 4-1. So, Ms. Smith, we look at this first transaction, and what type is it?
Type 1.
Journal entry 1. Where is journal entry 1 going to go on the statement of cash flow? Is it operations, investments, or financing?
Financial, the third one.
That's financing. So if we go up here to this template, we say that journal entry 1 is in financing. So all we do is we go down here, 20,000, journal entry 1. Put 20,000. That transaction's done. That's all we're doing. So we're going to each transaction and putting it in the location that where the template says it should go. Then we're going to add up each area and see how much money we got in operations, how much money we have in investments, and how much money we have in financing, changing cash flow. Purchase supplies on account, what we're going to do here.
This one is a transaction type 12.
Type 12. So since there's not 1 through 11, it's fractured. We're not going to use it.
This is the one when you talk about when it doesn't involve cash, then it cross them all out, right?
Correct. So this is the one where we're talking about. All we want to know is the cash now. That's all we want to know. So let's look at one more before I get you all working. We purchased 5 cars for $20,000 each. So that's $100,000, correct? we paid $10,000 down and signed a note for the balance. So we invested in $100,000 in cars. So the investment in $100,000 in cars that's gonna, that investment is really a JE7. We bought 100,000. I was on the phone talking about cars. Remember, where our business bought 100,000 in cars. So we know that's going to go where? That's a long-term asset, and it's $100,000.
So I was gonna say, so under investment, okay.
Because that's not operation, that's investments. But we go back, now we only spent $10,000 down, but we don't want to say, okay, we didn't buy $10,000 worth of cars, we bought 100, so we put the 100 down. But for the amount of money we borrowed, which is 90,000, that's going to come over here. And this is going to be a journal entry 5, a long-term loan. So what this reflects is that we bought $100,000 worth of cars. We signed a note for 90,000, so we borrowed 90,000, paid 90 on the cars, and we use our own cash for 10. If we don't do that, it doesn't reflect the fact that there's $100,000 in cars here, and the fact that you owe 90,000 on it. They net back to the 10 you paid, but 10,000 does not reflect what happened. Okay. All right, time for you all to work. Number 4, y'all do number 4. Just finding a place for number 4 to go. You all work on number 4.
Can you scroll up so I can look at the journal entries?
Say what?
Can you scroll up so I can look at the journal entries?
Journal entry types.
Yeah.
Let's see if I can go find the journal entry types.
What, isn't that right there?
No. These just showing where they go, kind of. But if you want journal entry types.
No, not the type, because I got the type. I just need to see that, like the JE5 and all that.
Oh, you need to know where they go.
Yeah.
Okay. This is the sheet that tells you where they go. It tells you 2 through 5 is an operation. If 5 is a short term. It tells you 7, 8, 9, and 11. If 7 and 8 are current items, current asset, 9, they go in operation, but on the use side. Journal entry 6, if you sold an asset, that's in part 2 here. And here's journal entry 7 if you purchase a long-term asset.
All right.
Then in part 3 are going to be journal entry 1, because that's how you start the company. Journal entry 5 if it's long-term. Journal entry 8 on a repayment long-term. And journal entry 10, which is dividends. So we have them down, all down now, Huntsville?
I don't know, but you can go back to what we supposed to do though, the word problem.
But just make a note of it. Just make a quick, put it somewhere quickly.
Uh-huh. I got a picture of it.
All right, everybody take a picture of it. So picture
So for
this.
4, is it journal entry 2 under operation?
Yeah. These people don't look calling me. Okay. So let's go back to our problem. So receive cash room revenue. What type is it? What type is it?
2,
2. And where does 2 go?
operation.
Goes in operations. So we're just gonna put JE2. And that was 500,000, correct?
Yes.
All right, so now we on 5 and 6. We paid rent expense and we paid salary expense. So do those 2 together because they're both expenses. So do 5 and 6 together. Where are 5 and 6 going? 1, 2, or 3?
Under 1, under use.
Going under 1 under use. So that's numbers 5 and 6. What type is it?
9.
Because we're paying an expense. That's a current operating item that we need to know. So how much was the first one?
20,000.
How much was the second one?
10,000.
Okay. So just realize that you don't have to be able to do this now, but you need to understand where the numbers are, or you'll never be able to understand if somebody's swindling out your money in a company.
Okay, how is it the cash flow from operations if you're paying them? I mean, if you
Well,
like,
in operations, you got money coming in, you got money going out.
okay, so the use mean that's the money coming out, and then the source means that's coming in.
Yeah, source is coming in, use is paying out. So if I'm looking at a good company, sources need to exceed uses. So that's what we're trying to show. Do the sources exceed the uses?
Okay. No, I get it.
Okay, so what's our next one?
Journal entry 10, 5,000 use financing.
Which one we on?
7.
Number 7. What is doing 7?
Oh, I said 5,000. My bad. 20,000. My fault.
So you paid dividends of 20,000. Where's that gonna go? What type is
Uh,
this?
financing. Oh, trying to type 10. Sorry.
J10. And that's a use, correct?
Yes.
That was 20,000.
I know it's 5,000. I was right.
5,000. Okay.
Yeah. I don't know where I saw 20,000 at. My bad.
That's number 7. What's our next one? What's the type?
Eight.
That is the type.
8.
Type 8. Payment of liability. Where's it gonna go? It's a current liability, so where's it gonna go?
Use operations.
Okay. How much do you have? What's your amount? 'Cause
1,200.
Okay. I changed them, but this is fine. Okay, what else do we have? Number 9 was paid automobile expenses. How much was that?
2,000. Oh, you said how much is it?
Yeah, JE9.
Oh, yeah, JE9. And
And we know JE9 is gonna
2,000
go where?
under operation.
An operation. How much was it?
2,000.
Now let's do our final one. How much do you have on your answers? Because I changed these. How much do you have on number 10 for payment on the note payable? How much do
Sorry,
you
I was talking in there. I didn't unmute it. Pay principal on note payable 10,000 and
okay, let me check.
interest of 5,000.
Okay. So what we're gonna do here. When we pay on the note, that's a long-term note. So that's a JE8. But long-term. Where's it gonna go?
Financing.
It's gonna go in financing.
$10,000.
That was number 10, wasn't it?
Yes.
And then we have this other portion here, payment of an expense. What type is that? JE what? That's an expense. Where's the JE9 gonna go?
9. J9 goes under operation.
On operations. And we're finished. Now we just need to add up each area and see how operations look. How much are the uses? Our source was 500. We add these up. How much are our uses? That 37,200.
I got 38,200. Maybe I'm wrong.
3,800. I'll take your word for it. So how much cash was generated from operations?
Do we subtract them?
It's like a T account.
Okay.
Sources, uses.
Uh, 461,800.
451,800.
Yeah.
So that's how much they got from operations. Here, part 2, that's 100,000 in uses. So now we're going to put this over here as a negative because the uses exceed the sources. But we're happy with that because the company is expanding. Part 3, what do we have?
110,000.
Sources.
15,000.
So what's that, 95,000?
Yes.
So this company got 451,000 from operations, spent 100,000 on investments, got 95,000 from financing. So its ending cash is how much? What's its ending cash? Anyone know the ending cash? 451,800 minus 100,000 plus 95,000. How much is that?
351,895.
351,895. Okay. So what we see from the company is that they had a lot of operations, they invested some money, and had a modest amount of borrowings when they borrowed to buy the vehicles. And so it looks like a good company. So that's the thing, it's a mechanical process to do this, but then the analysis is the key. Are there any questions? Can everybody do a statement of cash flow now?
Yes, sir.
Okay, so when we first hit something, as we did here, I know that you're not going to necessarily get it the first time, but we have to go over it the first time. Then we come back and we review it, and we review it until we get where we need to be. But that first time, if it's new and you hadn't looked at it, then sometimes it's going to be an issue. Okay, what I have in Blackboard actually are problems 4 and 5. So these are in Blackboard. So let me get team 1 and 2 to do 4 and teams 3 and 4 to do 5, because these problems are already in Blackboard. So this is just trying to let you see all of the situations with cash flow. And we'll go through these so you see each situation.
What were the problems again?
Okay, if you're on team 1 and 2, you have problem 3, 4, excuse me, 4. You have problem 4. And if you're on team 3 and 4, you have problem 5. These are already in Blackboard with the template and everything else, journal entry types, and the template on where each journal entry goes. So all you've got to do is to properly classify the transaction. So you get a lot of practice on that. So we let the teams compare. They get here, see which teams gets them right, which team gets them right. Any questions? So this is due on Tuesday also. So you have 2 team assignments due on Tuesday. One relates to bank reconciliations. The other relates to the statement of cash flow.
And they both in assignments.
I've got the statement of cash flow in there. I got to put the
Yeah.
bank
What about the
reconciliation
other one?
in.
Huh?
Say what now?
What about the other one that's due too?
I'm going to put it in.
All right.
Let's look at where we're going to go for the rest of the course. Here's accounts receivable, and that's next. And when we make sales, we have cash sales. That money's in the bank. When we sell on account, several things can happen, and it can happen on cash sales too, but we can collect. There can be returns, discounts can be taken, but then some people don't pay, and we have to write those accounts off the bad debts. So let's look at a situation where you had credit sales of 400,000, cash sales of 400, and credit sales of 600. And what you know is that 10% of your people don't pay. So you make the sale, you know 10% not gonna pay if it's on credit. The cash money you got, so you debit cash and credit sales 400,000. That's a type 2. On the credit sales, you debit account receivable 600, credit sales 600. That's a type 15. Then for the bad debt expense, only on the credit sale, you take 10% of the credit sales and you make the entry debit bad debt expense, credit the allowance for bad debts. Why do you do that? Because you're not getting 600,000 back, you're getting approximately 540. So the allowance for bad debts becomes a contra account. So we subtract that from the receivable, and so the receivable is only worth about 540. Related to that, in terms of sales, only 540 are going to be collected. So this puts us at a better state in terms of matching the revenue with the expense. So that's what we do. So that's the adjusting journal entry some of you had for bad debts. After we finish this, there are other ways to do bad debt. That's the easiest way. we will we won't go to inventory yet. We'll get to that next Thursday. But inventories is the only other big item that we've got to deal with. Now, if I talk to some of you all would have 50,000 pairs of shoes. But what you're gonna have to do is to run a shoe company and sell shoes. So everybody likes to buy shoes, but sometimes they run into problems selling shoes. So we will probably get to this approximately on next Thursday and finish out the course with that. Selling shoes. Let's see if I can get where I need to be. Then we're gonna, on Tuesday, once we go over receivables a little bit, then we're gonna look at depreciation. Of course, we'll look at the homework, but we're gonna look at how depreciation works. And depreciation is simply the items going down in value. We gotta record an expense for it. And there are two ways to do it: straight line, double declining balance. Straight line, we write off an even amount each period. 50,000, salvage, so 40 divided by 5, we write off an even amount each period. On the double declining balance, we write off more early than later. So we will cover this, all of this on next Tuesday. So these are not major items, depreciation, receivables. We just get them so you can make the journal entries. Any questions at this point? Any comments? Probably your study problems for the A students will be due on Tuesday. So I probably would move it to Tuesday midnight. And that way we would have covered depreciation, all the other items you should have. So we would have covered everything for you to complete it.
Professor,
Okay,
I do
so
have a question.
the A students got 3 things due Tuesday. What?
2 team things.
Yeah,
Then-
2 team things. Yeah, and then place our study problem.
Right. And the non-A
Okay.
students have their study problem also. It's a little shorter, but it's in course content.
So for the A student study problems, because I see it says comparing year 1 to year 2. What is year 1?
Year 1 is the beginning, that chart that he gave us. That's on the first page. That's year 1.
That's on what first page?
The first page, the chart where it say like cash.
No, that says year 2 beginning balance.
That's
So that
year
means
1
that's
though.
year 1? Okay.
That's year 1.
Oh, so that's supposed to be year 1. Okay, that's why I was confused because it said year 2 on there. It says continuing year 2 or something like that.
So,
We're doing year 2.
on your bank statement, your ending balance on December 31st becomes your beginning balance on January 1st of 2021.
Run that back. So that chart, the chart that was at the top, that's supposed to be that year 1.
If that's what happened in year 1, that's your starting point for year 2. And you got to put those balances in your T accounts.
Yeah, that's what I did. But I'm talking about for, I think, problem. I don't know. It's not right in front of me, but I think it was like problems 28 and 29. I think that's when it was like comparing year 1 to year 2.
Only thing that happens is you're gonna have a balance sheet for year 1 and a balance sheet for year 2. But that's not a major part of it. It's adding on the transactions for year 2 and finishing up that year and closing out the books. So
how would you input it?
Because I inputted it, because I put what was in the chart that was at the top. I inputted all that on my T account, and then when I tried to balance it and do the trial balance, it didn't balance out.
So
because one of the problems it was asking for.
The first thing you should do is to put those balances in and do a trial balance to make sure you're in balance. Make sure you're in balance. Make sure you didn't make any mistakes on what you initially put in. So put the initial balances in and do a trial balance to make sure you're in balance.
So year one and year two T accounts are all going to go together?
Yeah. It's just like your bank account.
Okay.
It goes year to year to
But
year.
it's supposed to be two different balance sheets for year one and year two.
Yeah, different. The balance sheet for year one is the one that you should already have done.
Mm-hmm.
And you put in year two beside it. Remember, you had an assignment to do that balance sheet.
Yeah, I remember that.
So you just put in year two beside it.
Okay.
Maybe somebody can explain it better to me because I'm still kind of confused.
So we will put like parentheses around it and then like put the year two.
No, you'll have two separate columns. Let me just see.
It's
so
two
it's the
different
balance
balance
statements
sheets.
you have is just two different sheets, and they just combine the two sheets. So you have one side say year one and one side say year two, but it's the same
Correct.
balance sheet.
No.
No?
Let me see. Here we have year one.
How many points is this?
So those numbers you got, you're supposed to already have this year one balance sheet done. Okay?
That's what I'm saying. Which one is year one balance sheet? Like, which one is that?
The first at the
You meant the
beginning,
chart?
year two beginning balance.
So
Yeah,
that's
it's
year
just
one.
year one.
That's year one. That's really year one.
Right.
Okay,
It's
because
just
it was confusing me seeing year two, beginning year two. That was throwing me off.
Okay. Are we clear now?
Yeah.
And you should have this balance sheet for year one already done. Then you're going to go through, create a trial balance, and then do the balance sheet for year two. And you're going to have two balance sheets side by side. Any other questions? Okay, I should be in office hours around 2 o'clock in the 01 number on Monday. I have a meeting from 1 to 2 every day now. So if there are any issues or problems, just alert me and let me know.
Monday, 2 o'clock?
Yeah, because I got a meeting 1 to 2. So I'll be in at 2 o'clock in the 01 number.
Yes, sir.
And I'll just, I'll push the, I'll extend time so, I'll meet longer. So I'll probably go 2 to 3:30. Anybody else?
Can you make sure you post this on YouTube so I can make sure?
Yes, ma'am.
Thank you. And everything from last class period too for Tuesday. I don't think you posted it on YouTube. You 2 classes behind, Dr. Boyd.
I don't think so.
Okay, let me check.
Check right quick.
How many points is this? The A student study midterm problem.
20 points.
20 points.
Yeah.
Will it be bad? Like, how much of a decrease would I have?
Talk
Because
like
I
that.
need to know.
I'm talking
Well,
about.
because it's not adding up to me.
It's just confusing a lot right
Yeah,
now.
it's confusing and it's a lot. Like,
You want to know what it is, Professor Boyd? It's these journal entries. Like that 31, I was fine with everything until I got to 31.
What's 31?
The
shoot, I
federal
was fine with
income tax
everything
rate
until I
to be
got to.
utilized in the current taxes at year end is 20%. Like what?
You know, like you pay. Do you pay more than $750 in tax? Are you?
Yeah, I do. But is that from like I don't know where I'm supposed to
All
get
you
the
gonna do?
information from.
You're gonna go to your income statement,
Okay.
see how much income you got.
Mm-hmm.
Let me see. And like here, they calculated the taxes.
And
Then
then I just what? Times it by 20%.
Then you make a journal entry debiting income tax.
And where is that on this charts of accounts?
Put it on there.
You said what?
Put it on there.
Put it on there.
Yeah.
Okay. So I would debit federal income, but what would I credit?
Accrued liabilities.
Accrued liability. Okay.
That's all
Thank
it is.
you.
Anything else?
Yeah, just know if you don't get it, you can go ahead and give me 10 points. I'll give you half of it. But yeah.
Say what now?
I'll give you half of it.
Just remember that you're working on exempting the file.
Okay, then one more thing. Dr. Boyd.
If you get it
So you
balanced,
know how we do the adjusted
you learn a little bit on inventories, you're in line to exempt the file.
Okay, one more question. So you know how when we do the adjusting journal entries and we make the T accounts, I'm trying to put everything on my T accounts without getting confused. Like when you get the new balance for supplies,
Mm-hmm.
I just take, say for instance, if the new balance is like $31,000 and it's debited, then I go back to my supplies and my supplies chart, and I just put supplies. Then I just put it in under supplies debited for 31,000.
Wait a minute now. What's
So
the 30?
listen,
What's 31?
okay, say 31 is the balance. Like we're just gonna say a number. If we doing supplies, and it's
Okay.
a different journal entry. Now say that the new balance is now $21,000 for
Okay.
supplies, right?
Okay.
Now, you know how we'll have all the adjusted entries and stuff on the T accounts. Now, what
Right.
about say 1 through 4? All those are supplies. Can I take that balance and put it under supplies? That's where I'm getting confused at, because you know how we have like the little T accounts that we do for the adjusting journal entries. But then I want to put it back on like the supplies T
Those are the
account.
same
Do you
accounts.
get what I'm saying?
Those are the same accounts.
Right.
So you're going to have a beginning balance in supplies. It's already there. Then you put in as debits the purchases in your new year. So now you balance
if the new year balance is 21,000, then I put 21,000 in and not like 4,000, which was the beginning one.
Right. You got to do well. That's what should fall out to be in there. That's what it should be. Let's see, just a second.
Can you just take this as extra credit? I feel like that'd be like 10 times better. I think that would relieve a little bit of stress off my shoulders.
Because the anxiety is through the roof right now.
Anxiety is way past the roof. We at the stars. We going closer to outer space at this point. Like we've been working on this for like 2 weeks.
Have you?
Okay, yes, go to that. Let's see. Okay.
Yes, please break it down for me.
Yeah, let's please help us out.
Okay, so look at what this person did. You're not gonna let a person in the morning class. So this person
Okay,
said, so you can look at these. I think this should be similar.
but no,
Beginning
listen. So if
was
he
the
doing,
beginning balance 50,000. Hmm?
okay, but is that just for regular supplies on the rest of the entries that wasn't adjusted?
Okay, you started off with $50,000 in your bank account.
Mm-hmm.
You added 15, 25, and 25.
Right,
Okay.
I get that. I'm talking about when we do the adjusting journal entries.
All right, so what does it say is the ending balance?
Oh, let me just pull something from the book. Okay, like on page 78 when we doing this is prepaid insurance. I need to see.
Why don't we work the one? Don't all of y'all have these numbers?
We all have different ones.
Yeah, but I think supplies may be the same.
Okay, let me
Well,
go to my
I was
supplies. Let me
asking
go to my
because
T
it
accounts.
looks like they're all the same, but like some of them,
It's
they're
different numbers.
different numbers.
Yeah.
But I'm saying for
Because
the
me and Latanya
supplies,
were trying to do it, and
Okay,
we
so listen, for supplies. Okay, yeah, I have that. The adjusting journal entry was 50,000. But when you do 50 and 20, you get 30,000. That was my new balance. So that's where I'm confused at with my T accounts because
how much was your balance?
I didn't have 70,000. Wait, I probably did. Hold up. No, I had 75,000.
Okay, well that's fine. So let's assume that it's 75,000
Mm-hmm.
with your balance. And then once you checked how much you had, how much was left then?
But wait, you know how he got 70? I had 75,000. So I don't know what you're talking about now.
That's
Like
fine.
how he, okay.
All right, you got 75. What was
Mm-hmm.
your ending balance in supplies?
My ending balance from year one.
No, from year 2.
You confusing me.
where
That's
he was
starting off with the mine was 55,000.
So yours said the ending balance was 55,000. Okay,
Correct.
Where did you get 55,000 from?
that's hers.
That's
Okay,
mine.
so that means your
I got
AG.
20,000 from him.
Okay.
What does your AG have to be, Janet?
For this,
Yeah.
uh,
It'll be the 75,000 minus the 55,000.
Yep, that's all.
Mm-hmm.
So your AJE would have been 20,000.
20,000. Yeah.
That's it. So you put your beginning balance in and everything
Mm-hmm.
involved. Then you see what your new ending balance is. The difference is the AJE.
Oh, okay. So then, like my beginning was 45, and then when you do the balance, it was 30,000.
Okay.
But I thought I was supposed to do 30,000 and 45,000. I thought I was supposed to add that all together because 30,000 was the only adjusting journal entry that I had to do with supplies.
So you had 30,000 left. So then you go with your 30,000 and you come up with your AJE.
So you still confusing me.
Well,
are
she
y'all
said
doing
she has nothing
25?
different.
Because listen, Professor, let me find this problem.
Are y'all doing number 25?
Yeah, find yours, McKinney. Find yours.
Okay.
Looking at, are you talking about 25?
Um, I think this is 25. Let me
So
hold on.
25. So 25 for me. It says ending supplies inventory 20,000. That's
20,000,
what I have
yeah.
on mine.
Yep, that's exactly where I got that from. And then I got 50,000 from the year one.
Yep,
You
that's what
have
I got.
50,000 in year 1. How
Yes,
much
and
did
then
you
now
have?
that means that your new balance is now $30,000.
No. What did you
Why?
say the balance was?
So we would have got, so say for instance,
What did
we're
it say
given
the
that
balance is
ending
supposed to
balance
be?
is 20,000, right?
Yes,
What-
it's a ending supplies inventory is $20,000.
And
That's
then
what
if our supplies ending is 70,000, correct? So then it'll be 50,000.
But
that's correct.
okay, where did you get 70,000 from? Because on mine
Oh
it's
no,
$52,000.
I'm
Oh,
looking
you
at
just
his.
doing what he doing? Okay.
Yeah, I'm just looking at his. I wasn't going off of mine.
But if it was going off ours, then it would have
If it
been
was going off,
30,000.
Yeah,
let me look.
whatever it is.
Okay.
So you add up the beginning amount and you'll purchase it.
Oh, so listen, we don't get. You see how you added the beginning amount?
Yeah,
We don't go to year one and take from supplies. We just supposed to win and added up the rest of. Okay, I get what he's saying now. Do you get what he's saying?
beginning and everything else.
So you're supposed to add
Yeah,
up.
it's the beginning and everything that they purchase throughout the year. That's what
So,
the supplies is. They
so
started out with 50,000 and then they start purchasing more. So you add all it together.
you add all of them together. Okay. Thank
Hmm.
you. See, I was a little lost on that. That's the only thing I was confused on. Wait, let me see.
You got
Anything?
everything else for Kenya?
Hold on, let me check. What about I do the same thing for office supplies expense? Okay, I think I'm okay.
So you had one little thing and you acting up.
I did. I had two things, but I kind of figured that was it for 31, but I wasn't too sure with the income statement thing.
Anybody else?
So but that one's just for the AJE though, right?
Right. So
But
on Monday,
that's under 20. So we're supposed to do those two steps. So we were supposed to do the what was it? Supply. Let me go back.
so what we'll do on Monday and on Tuesday, you can, send it to me preliminarily. Then I can pull up, just like I did for this student, I can pull up your two accounts. We can talk about your situation. Okay?
Okay.
But when it comes down to the trial balance, am I still adding that year one on that T account when I do the trial
All right,
balance, or
yeah,
do I
it's
just do it
your new
separately?
trial balance
Because that's where that
the
50,000 comes
supplies
from.
with it and everything else. It's just like your bank account. When you get
Okay.
to January 1 of 2021, are you going to forget about your money that you had on December 31st of 20?
No.
All right, then. As I always saying. All
So
right.
you add all of those up and then you do your adjustment entry and then you get your new one. Okay, that's the only thing I was confused on.
Good. So finish it up. Now on Monday, you can, you'll be able to send your work to me,
Yeah, I'm gonna be in the
and then I can
office
pull it up.
hours.
You can send it, I can pull it up, and we can talk about your situation by itself.
Okay.
But let me go because I'm late for my next class.
Okay. Thank you.
You're welcome. All right, child, do the work.